Hello, everybody. Thanks for watching today in advance. Here it's 7:15, or well, July 15th, and we're gonna just do kind of a quick update here, just because I feel like we're right in the middle of you know sometimes when you're right in the middle of the week, it's good, but other times you're kind of like mid move. so so what I was gonna do here is just talk about a bit of just again like the bullish bear scenarios here. I was going to cover both Nasdaq and the S&P. And then I'll go over the usual suspects here. So right off the bat here, I kind of think what we might see overnight is sort of like kind of a cap on any sort of movement here. I think you can probably see um, on the let me do like a 5-minute chart here. So overnight, kind of during the day, what happened today is we had like a 5-wave down sequence. As my cord gets caught on my chair. We had like a 5-wave down sequence, and then I think we'll probably see this 5-wave up. Sorry, let me zoom in for everybody. Yeah, so basically, what I think we're probably going to see here is just like a slow kind of grind up, and that's just overnight in general. One path we could see here is maybe like in the morning, we could see sort of like an ending diagonal sort of thing, where tonight we could just kind of bounce around this, maybe in the morning, butt up against this 50 DMA again, and that's the purple line. I'd say if we close below the 50 again, we only had maybe like I don't know a little bit of time that we spent back above the 50, but we've had now. This will be 3 closes in the last couple of days that we're the Nasdaq is below the 50, which is not very good. Or at least it's not like super bullish. I kind of feel like that like just today watching the price action, there was a lot of attempts by the bulls to try to squeeze up, and the bears kind of shut them down. I think the bears are now ready for any like attempts at short squeezes and things like that. There was a couple pretty high volume attempts to do that in the last couple of days. And that's important to know, just because it adds more context to whether it's safe or not. I wouldn't say safe, but you always want to stack the chips in your favor. So if there's more like participation on the bullish side, like you always kind of tell like, okay, they're probably gonna try to jam this up later today. So that's that's one scenario before this major scenario I think plays out here. But kind of wrap up the bullish side here. I think there's definitely a possibility that you could see it on the run up to where that higher volume was from around this morning or Wednesday morning, I guess, if you're watching tomorrow morning. So that's really like the short-term version. I think there's for the continuation of the bullish case here, there's another scenario where, let's say, the sellers sellers just can't seem to get it done. It's a possibility you could see some sort of triangle like this, and that's where you might see like a bounce off the 50, maybe hit some more. We still have a lot of buy delta up here, but also some sell delta below. So this point of control here becomes very important, which is this right around like 29,420. And if you zoom in a little bit more, I mean, there's probably going to be a little bit of sell pressure no matter what. It's just a matter of like kind of like longs reloading and being able to push above these moving averages. But you can kind of see here that that these are the real big pieces that I want you guys to take away from this, is that we have some very strong, I wouldn't say very strong, okay, it's probably an exaggeration, but we do have some. These are considered rejections of higher prices, closes over these moving averages, and both of these have been kind of bait for the bulls. And even though there's been some buying and stuff here, like overall, you kind of see that the volume is declining a bit. If you go up in like a higher time frame, you can kind of see that you're not really getting a lot of the follow through. And before you would almost automatically hit the next major fib level up. But to me, this kind of seems like a pretty tight range that they're going to maintain. So I can count. This is probably like let's say like probably the fifth wave of a triangle, a very broad triangle. But you could still see an extension up a little bit higher. But I would expect that to get kind of sold down. So you would still have the same sort of ascending type of pattern, which ends up being bearish. But yeah, bit wrong before with that. So still want to be cautious because the larger pattern here I think is also very important. So I guess to kind of summarize, I think probably what we'll see is one more little push lower, and then that sets up for like a longer term kind of launch higher. Now this 28,865 level, that's like your bifurcation level. You could get these like inverse head and shoulders, and then you could prepare for a launch higher. But I'm not really getting that vibe right now with the Nasdaq. I think that we're kind of in a holding pattern with earnings coming up here, but it's still kind of far away. So, but I still don't think you're going to have any big moves before you see all those mega cap companies report. Now, when you look at the S&P, the S&P's been kind of defying gravity here for a bit. If you look at the market breadth here, this is we've only got about 51% of stocks trading above their their 20-day moving average, 21-day. Sorry, no, it's 20. Sorry, but it's also been a struggle for the S&P here. You've got higher sell delta on a lot of the days recently in July, and you've also got this ascending pattern here. I think that it's possible you can make another local high here. I don't discount that at all. Maybe like a 7,600 again. But I also think that longer term, this is you've got some sort of you've got a pattern that's sort of like the Nasdaq, but it still kind of ends up being a triangle, and I still don't think it looks super symmetrical. So you might just get more sideways chop. So let's say you do get this resolve higher. I still think the sellers are out and they're distributing for sure. You could just get pattern expansion with this, where it just drags on for the back half of summer here, and it's just more distribution happening. But you can still play the range if you know the spots to kind of buy back in. I don't know if this is going to be realistic. I think that you're probably seeing again with volume declining here, you've just got this the Iran conflict stuff's heating back up again. You've got higher yields, and that's really gonna put some downward pressure on stocks. Like typically, I mean, it's just been defying gravity and moving in opposite directions from normal correlations for years now, really. And eventually averages they don't lie. So I think overall here we're just gonna see probably a little bit more volatility from just kind of in this range here that we've been talking about. I don't think there's going to be a big break either up or down. I think everything's kind of in a holding pattern until we get past earnings. I think that's probably the main event here. I think the Fed now, the tone's kind of moderated on raising rates or even lowering rates. I think I don't think they'll do anything really. Definitely not before the election. But if oil shoots back up to $100 a barrel again, or even higher, they'll have to do something because you're going to see that reflected in CPI and PPI data that the very next month here. So it's not a surprise that CPI and PPI were down this month. They've been stepping on the price of oil for 2 months here, and that's reduced some of those inflation concerns. But overall here, this is still more about it's still just more about earnings. Sorry, 1 second. My recording's trying to kick me off. All right, so that's so anyways, long story short here is that both the Nasdaq and the S&P, they kind of look a little they're a little inflated. But if we do see this sort of flag play out here with the Nasdaq, which we've seen time and time again. I think the catalyst for that is just it's going to have to be, one set of earnings, I guess you could say. So like, let's say, you get a sell off, for Thursday, Friday here to end off the week. And then, next week when you get some earnings from some larger companies, then you can get a big spike here. And that'll, let's say that breaks your upper trend line resistance. And then, you get a lot of sellers that cover, and that can squeeze up higher. And that's kind of the same thing with the S&P. I think, we'll probably have to, maybe droop a bit down yet before it sets up for another run. But none of these patterns here, or none of these bars on the chart really look bullish to me. Like, it's pretty easy when you see a 5-wave sequence. You're like, oh, okay, that's bullish. Or when you see a big corrective ABC, there's going to be a 5-wave after that. Like, there's just so many things that or so many things that are in play here at the moment. And I think we're just seeing distribution, and it just moves like a glacier. It just takes a while. All right, so that's those are the indexes. I think I have a little bit of a downward bias on it. Again, I hate to be the bear, because bears are lame, and they always get beat up. They always get pushed into lockers and their books dumped. But laughing at my own jokes again. Sorry, but I still think that you're in this range. You're right at this point of control where almost all this volume is traded, or at least the vast majority of this volume is traded. But the volume's dropping off, and it's just a general distribution pattern. And I think that you'll see. I think we probably just had like the top of our wave 4 here in this bull flag, and we just need one more touch here, and wave 3. You got a touch here, and then maybe you're going for lunch. All right, but I think it'll be more clear like next week. All right, so that's why I wanted to keep it a little short. So we're gonna start off with stocks here, just because we're talking about tech. Stocks, I think, is going to be like, they had a bit of a retracement here today, but it's kind of funny that well, not funny. It's always planned like that. Where it kind of landed here on this this trend line back test. I think there's still some worry out there about semiconductors and AI and all that sort of stuff. Like, is the market too high? Blah blah. Nobody's ever really cared that the market is too high unless you're trying to short it. But this does kind of look like a bearish pattern. I hate to say it, where this does look like kind of a bear pennant. And if the bulls can't get a close above this point of control and above the 50-day moving average, that this purple line here, if they can't get a close above it, it remains bearish. I've been trying to think about like what's an easier way to explain some of this stuff for people who aren't as like savvy with trading or investing. Really, it's like if you use your moving averages, and price close below it or price closes above, those are typically bull bear signals. So anyways, with stocks here, I think you'll get maybe a little bit more selling, but I've been surprised before with that. But the key here is really look at this like 265 level. I think that's going to be a pretty clear indication of whether we're going to be bullish or bearish in the next couple of days. But also, again, earnings, so it's a big outlier. Rates, I think you had a bit of a pullback in rates here just from low CPI and low PPI, but now that oil's getting off the floor again here and starting to escalate, I think these are probably just temporary, like little B waves. I know, not everybody's a wave person here, but this is what looks realistic to me here. But this might not even be an ABC. It actually might be like a final kind of count up, where you might get a dip lower, and then potentially it really depends on like the price of oil. I think rates getting up to, let's say, 5%. I don't think it's unrealistic. I mean, we're pretty close already. It's bad news. It's bad news for Nasdaq. It's bad news for growth stock. It's bad news for the economy. And that's just things that you just got to kind of roll with the punches on. So there's two alternatives there. One is a deeper pullback. I think it's possible you could see a deeper pullback and a setup for higher yields, but you're going to have oil price cooperate with that. So if there's another ceasefire fake out tweet tomorrow or something like that, then you could see the yields take a dive here. But again, use that 50, that purple line. It's close above is bullish for rates, bad for bonds. close below is good for bonds. Maybe people are buying protection, or but anyways, never understood why people wanted to buy immediately depreciating asset. It's a never mind, it's a bad joke. All right, so let's take a look here at metals. Metals, I think, are really looking good. They're starting to kind of, I think they're starting to get bottom out a little bit. They've really been unfairly crushed here. Gold's kind of been flirting around this 4,000 level here for a while. I think anything really there is some sort of there is like a death cross here, I guess you could say, between when the 50 crosses over the 200. But I think I think the part to really understand here is that these are just consolidation patterns, and sure, they have downward bias, but if you look at the larger sort of thing here, like we had that big run up in metals, a while back here, but metals typically extend, or not metals, like commodities in general, they typically extend their fifth waves, and I think if you look out and you look at how this has been kind of trading recently, I think you could definitely make the case. You could definitely make the case here that this is a really big bull flag for gold. So even though gold, I think, is really getting sold down, and you also get the same sort of thing with silver, I think that you're starting to see some signs of life here where I picked up a couple of SLV calls for that expire at the end of August here, just because I think you're going to see, even if you get a little bit lower of lower of a price here, I think that you're starting to see kind of that volume decline here from sellers. I think there's just general like seller exhaustion, and it's kind of right where it was when it broke out before. So if you missed the entire the entire run from the end of December of 25, well, that's all right, because 7 months later, or 6.5 months later, we're ready to go again. But anyways, so I would say metals are, I think they've been, probably unfairly, not unfairly, whatever, but I think they've been probably pushed down to serve a wider purpose. There's really no like major bull market that could have a lot of alpha, I guess you could say. Like, okay, so if you're in Nasdaq since 2021, you've made a boatload of money, providing you didn't sell and try to be smart and short or whatever. Metals, like everything kind of comes in cycles, and it feels like equities are topping, like a long-term kind of top. It's really overdue, that we haven't had any, correction that's been kind of biting and, more persistent. That's typical of like late stage bubbles. But I think that metals are going to be like the next sort of thing that might be in vogue here with like a bull market, because you can't have everything being a bull market at once, because there's only so much money and so much liquidity. But watch how like the narratives change, watch how the news changes. So right now everything's about Iran and oil and the Strait of Hormuz. And that's true, but like we're also going to have inflation because of that, and typically when rates go up, metals don't typically go up, but that's just because they don't really pay like a dividend or a yield. But there's always a lot of people who always come out of the woodworks and say like, well, I want to have physical gold if the world's going to tank, or something like that. And I'll bet you'll start to find some people that are going to come out of the woodworks here and start to give metals a bid. So oil here real quick. Oil, I feel like, is it's definitely set to rock higher here. If you look out here, and this is adjusted for contracts or contract rolls, sorry, it's a little cluttered, but you can see it's a longer term kind of trend line here that it's sitting at support on. And I think that I think we're actually getting pretty close to hearing more updates about oil supply, just in general. Like, all the reserves have been depleted, and you're going to start to see some, news articles and some prices going up just by default, because there's not enough supply that's making it through. So ever since the start of the conflict, there's been a significant amount, like, less of oil that's being sent across the globe here. So we've been shoring up that gap with just oil supplies, strategic reserves, that kind of thing. And we're not really replacing it as fast as as fast as we should in order to keep prices stable. So I think probably the next couple of weeks you're going to start to see more concerns about that, and price of barrel getting higher and higher just because of straight supply and demand. Gas got hammered for no reason. I'm kind of waiting for it to make its final move down here. Then I'm gonna add some oil longs for sure. It's got some it's got like a weekly kind of exhaustion signal there. Bitcoin, I'm actually surprised this chart really keeps working out well. Able to call a lot of this stuff, but it's you're still kind of looking at this support zone here. We've had a couple of closes above the 50-day moving average. I think there's it's definitely possible you could see a run up here for like maybe 70,500. But yeah, you just want to kind of keep an eye on this 50-day moving average, like this 64,100. Not last, but Nvidia I think they had a kind of a wild couple days here. It's up, it's down, it's up, it's down, but it did close above the 50. But if we get some selling tomorrow, it might not, and that's still not super bullish. Just because again, like we've been kind of this 50's been kind of averaging down here, and it's not what you want to see with a massively bullish or 17% of the U.S. GDP just sitting under a 50-day moving average for price. It's not good. Last but not least, Tesla. So Tesla here, I think Tesla's getting kind of weird. I thought it was gonna kind of rip a bit more, but then we had this real big sell, and it's kind of looking like this. Like you're getting this sort of like same sort of bearish kind of pennant, not pennant, structure, whatever you want to call it. But long story short, here, I think it's probably down, and you'll probably see like an inverse head and shoulders, and then that's I'm a buyer at 376 for sure. All right, well that's pretty much it for the day here. Thanks for watching, and good luck. Well, I think next week we'll probably have some more concrete things to go off of for some longer term patterns. All right, thanks for watching. Have a good night.